If you have a position at Goldman Sachs, you can't borrow against that position to trade in your Interactive Brokers account. That just does not work. And so again, going back to having all of these protocols working with one another, you capture net new market share as more and more folks come on chain that you just wouldn't capture historically, and it becomes more capital efficient. So what we've actually seen is DeFi and on-chain protocols capture market share from CeFi exchanges and Prime because you have that composability, makes it more capital efficient. And what I mean by capital efficiency, that's kind of like calling institutions. Capital efficiency just means it's cheaper. And so suddenly, if something's cheaper to execute on chain and you get the same yield or higher yield, why would you not do it on chain?
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. We just got off our recording with Kantorovich, who is the co-founder and co-CEO of Upshift and August Digital. I would summarize this podcast as a conversation around the fact that institutions that are coming on chain are just like us as retail. Aya has built a platform that serves, major capital allocators that want crypto exposure. But then from that sort of like crypto prime brokerage, they saw a need to build a vault product.
Yeah, one thing that stood out to me is, so even the August Digital clients that they have started to use the Upshift product, which to your point, like there's just a clear trend that people want things that are easy. And these are sophisticated actors that could do all these trades themselves, but they're opting for like the one-click solutions. Another big kind of takeaway for me is it's just obvious now that this like vaultification of DeFi is happening. I think Morpho really kicked this off with curated vaults, but we're seeing a lot of people lean into vault curation and more of this just like curation and becoming this like intermediary that's building these composable pieces for all of DeFi to kind of build upon. So
I think a number of things that Aya teaches us in this episode is that, so Upshift is allowing for folks that, again, let's call them like institutional DeFi players to create these vaults. And so to your point, like learning some lessons from Morpho, that's important because big money that's coming into the space is not just going to like ape into the next vault created by some anonymous degen team. They want credible names there that they can trust. I mean, honestly, they want someone they can go after if something unexpected happens like an exploit. And so it makes a hell of a lot of sense that they see a credible name that's running a vault like, let's say, August Digital running a vault on Upshift. And then the usability of all of this, the one-click sorts of vaults. So it's not a surprise. At the end of the day, like these major capital allocators, they need a defensible strategy for them to earn yield. They need to be able to earn a competitive yield, which those numbers speak for themselves when you look at the yields on Upshift. And by the way, all of this is permissionless too. So like calling out the fact that there's opportunity for the big boys, the big, capital allocators, but any one of us can permissionlessly connect to Upshift and use those vaults. And I think they're truly delivering this, composable money Lego type of like vision that all got us on board. Except again, the end user is no longer anyone on chain, which really like catered to us as retail users many years ago. Like they are really working hand in hand now with, folks that are managing much larger amounts of money.
Aya deals and talks to all these institutional players behind the scenes. So we ask her, what are they actually looking for when they're selecting a network, an ecosystem to deploy capital into? Like, what are the criteria that they're looking for? And then we also ask them, what are these institutional players looking for as far as yield and DeFi opportunities? Like, what excites them? So you'll have to listen to hear Aya's answer. I won't do it justice.
Yeah, less of the hypothesizing, the like ivory tower type thinking, the bullshit that you read about on crypto Twitter. I think we get some more meaty answers from someone who's actually interfacing with crypto DeFi institutional type clients. But before we do, a quick reminder as always, please subscribe to the Edge Podcast wherever you enjoy listening or watching, YouTube, Spotify, Apple. We would highly recommend you go to the-edge.xyz. That's a great place to get real-time notifications for not only new podcasts, but any of our written content, guest posts, tutorials, yields of the week, and so forth. And then one last thing, as always, please show some love for our sponsors. Again, we work really hard to curate partners that are not just sponsors. These are folks that we've known and we enjoy working with. We know their products. We believe what they're building is valuable. So if you go into the show notes, you'll find links to all of those different protocols and applications. So go exploring. There's lots of great partners there, lots of great yields to discover through our partners at the Edge podcast. The crypto UX is broken, and AI, you can't trust it. Let Magic Newton set you free. It puts financial freedom on autopilot. It does all the work for you 24/7, so you can go do what you want. This is the vision behind Magic Labs, the creators of embedded wallets. Used and backed by the best, see for yourself with a simpler crypto UX powered by verifiable AI agents. Get started at newton.xyz. Maple Finance is one of my favorite products in DeFi. It is a gateway to sustainable real yield powered by over 1 billion in AUM across USDC and BTC products. And now with SYRUP.FI by Maple, anyone can earn institutional grade yield. Learn more at SYRUP.FI, and thanks to Maple for supporting us here at the Edge podcast and Edge newsletter. This episode is brought to you by SKALE, the next evolution in Layer 1 blockchains with a gas-free, invisible UX, instant finality, and robust security. SKALE allows for limitless scalability and has already saved its 50 million users over $11 billion in gas fees. Visit SKALE.space today and follow their journey on X at SKALE Network. Overwhelmed trying to manage your crypto and DeFi investments? Meet iYIELD, a free financial planning tool for crypto natives and yield farmers. iYIELD's dashboard compares returns from your DeFi positions side by side, providing clarity to help you make better decisions. iYIELD supports a growing list of over 16,000 tokens and 40 of the top DeFi and staking protocols across 17 blockchains, including Ethereum L2s. The best part is that iYIELD is 100% free, anonymous, and there are no ads. Check out iYIELD.com today to take control of your financial future. Hey folks, I wanted to tell you a bit about our sponsor, PYTH Oracles, your go-to source for smarter data to power smarter contracts. PYTH delivers real-time market data for crypto, equities, FX, and commodities to over 80 blockchains. With 120 plus major market participants like Jane Street, Binance, and CBOE, PYTH ensures secure, low-latency feeds trusted by 430 DeFi apps. You can learn more about PYTH by going to pyth.network, and thanks to the PYTH community for supporting us here at the Edge podcast and Edge newsletter. All right, let's introduce Aya Kantorovich, co-founder and co-CEO of August Digital and Upshift. Aya, welcome to the Edge podcast. How are you doing?
I'm good. Thank you for having me. The market looks a lot different than when we first met.
Absolutely. Yeah. Before we get started, there's a great sort of background story here to knowing Aya over many years. So many years ago, when I was working at Consensus, we would host this like TED Talk type event, which was called Ethereum. And the point was to tell compelling, inspiring stories about Ethereum builders and investors. And one of her colleagues, Dan Moorhead, who is the co-founder of Pantera, when Aya was at Pantera, we were coordinating to get him, to do talks like that. So I just remember like that was, I think, my first interaction. But from there onward, I got to watch Aya just rise up through the ranks there at Pantera and eventually with Falcon X and now here with August Digital and Upshift. So just really cool to have you on the show, Aya. But why don't we talk more about that background? Like, let's talk about more about like what's led you to founding August Digital and Upshift. These are two totally separate entities. No doubt we're going to focus more of our time today on Upshift, but I think it's important for folks to understand, what it is that August Digital offers as well.
Yeah, absolutely. Again, thank you so much for having me. There's so many fantastic builders that you bring onto this podcast. And so, can't recommend enough listening to other episodes. And also, just thinking through kind of how I got to this place, thinking through the evolution of, I think when we met, it was in 2018. So all of the different cycles that we've had, and the focuses of the different companies that existed at that time. In 2018, that was pre-prime brokerage models. It was during the era of, exchanges, primarily OTC desks. You had DeFi blue chips, but really early phases of it. Then it transitioned into, the aggregation layer of liquidity. And so, you had primes, you had smart order routers, you had a lot of tools and technology that were primarily built for the institutions entering the space. And institutions at that time, we've been using that nomenclature for years at this point, but it really just meant crypto native funds. And you had all these tools and platforms built for the, crypto native funds. And the word on the street was always the institutions are coming, the institutions are coming. And what they really meant by that are the BlackRocks are coming, the JP Morgan, Bank of America, the stablecoin announcement deal that just came out, those types of institutions are coming. And it took obviously many years to build the kind of technology that would allow for those clients to enter into the space in size. And at the same time, you had DeFi evolve. And so all of this was happening in conjunction. And the beauty of what I learned at FalconX was, the tools and tech that these institutions needed in order to have a really seamless user experience. And when, FTX hit, a lot of the concerns for me personally was there's a lot of strengths in DeFi. DeFi works. It has consistently worked through all of the bulls and bears of the market. And the blue chips have shown a level of resilience that you don't see in CeFi, let alone traditional finance. And so how do we bring the user experience that one gets in CeFi and on these prime brokerage desks to DeFi? And what's missing in that transition? And so, when I left FalconX, the company was valued at $8 billion, had over 700 institutional clients, was facilitating multiple billions a month in volume. And the user experience was incredibly seamless across all the liquidity venues that it connected to. Now, in DeFi, as you know, having been in the space for so long, the user experience is broken, has been broken for a long time, and it certainly has gotten significantly better, but by no means is it as seamless as the execution you have when you're trading on Robinhood. And so that was really the focus when coming to August. Now, August was initially, it was born out of the collapse of FTX. We actually got our term sheet the week FTX collapsed. And I will tell you, fundraising that week certainly takes years off your life when you feel like the entire space is capitulating. But the beauty of that is there was a lot of commitment both on our side, our investor side, and clearly clients who demanded net new products that didn't exist on the CeFi side. And it boiled into three main things. The first is I want transparency. The second is I want to be able to know what my counterparty risk is and underwrite it properly. And the third is that I want capital efficiency that necessarily CeFi doesn't always give me. And so that was what August was born out of. August is an on-chain prime brokerage. So think one account that allows you to trade, borrow, lend, and execute all in one place. It can do so not only with DeFi, but starting with DeFi, but also with OTC products, as well as CeFi and exchange products. So the beauty is you can have a position on chain and you can get capital efficiency by borrowing against that and trading on exchange, or borrowing against that and trading OTC. Your health factor will all be in one place. And so you can get all of the metrics that you get in CeFi, but on chain and DeFi in one seamless user experience. So that's on the August side. I'll take a pause there and can dive into the Upshift side as well.
I just want to key in a bit more on the August side, because something you said, well, a lot of what you said resonated with me, but this idea of the institutions are coming, the institutions are coming. If you've been in the space long enough, you've literally heard this. I think I've even said this line on multiple podcasts too, but you had a tweet back in March that sort of like, I did one of those double takes, because I'll just read the first couple lines. So you say, institutions have been quietly coming on chain in size, and they're doing so using August. August has processed 7 billion in monthly volume, originated 400 million in loans while supporting 13 plus blockchains, 250 tokens, 70 protocols. So this was back in March. And honestly, like that 7 billion number really shocked me in volume, like monthly. So to say that they've been quietly coming on chain, I think is probably pretty accurate. Maybe give us just a little bit more insight into this, what does it even look like for an institution to come on chain? And then you talked through, I think, some of the important things that were needed, like tools that needed to be provided to these institutions, but just any more insight on what they were really waiting for?
It's really cool to see, because a lot of the evolution that happened while I was at FalconX, bad data, cleaning data, aggregating it, making it easy to view in one dashboard, that took years of work. And the same issue happened in DeFi. So if you think about, for example, on the data side of things, oracles, a number of the assets that we support today, we had to build our own oracles for those specific asset types. So for example, if someone's borrowing against a liquidity position where they've deposited 3 assets, let's say into a curved pool, how do you underwrite that asset? You have to have an oracle into that pool and then underwrite the value of those 3 assets weighted into their weight on the pool level. And that has to refresh every couple of milliseconds. So if you think about, that entire experience, that's just, one pool, one specific pool, now expanded to the universe of, at this point, we support 17 plus blockchains and over 400 protocols. So it requires a significant amount of data and data processing. So that was one big thing for institutions, right? It's to be able to actually not only see what the asset is worth, but also be able to cross-collateralize it, use it as collateral for a loan. Because the biggest main issue with DeFi today is that it is not capital efficient. And what I mean by that is, we talked about this earlier. When you have over-collateralized lending and you take a loan off platform, you suddenly, your health factor is just based off of the collateral that's sitting on the platform, not the loan and how it's deployed. Now, if you deploy the loan within the same ecosystem, you now use the loan as collateral as well, and you can have the health factor of both. And so you can technically borrow more as so long as it's within that same ecosystem. And so in DeFi today, there doesn't really exist this concept of a closed ecosystem in the way that it exists, like, for example, on exchange when you have multiple positions in one account, or on a prime desk when you have multiple positions with them across multiple platforms. And so the idea was, how do we bring that capital efficiency piece? So in summary, data was a very, very big portion of what was broken in the space. The ability to pull that data in an accessible way via APIs. It sounds very, very simple, but given how big the DeFi space has now become, obviously when we started in the space, there you could count on one hand how many chains there were at the time. That has just completely exploded, and the number of protocols and assets you have to track has exploded. So getting that data for all those assets is important. And then the capital efficiency piece, to make sure that your positions across all these ecosystems speak to one another, is also very important. Because again, the goal is, how do I have a user experience that is as capital efficient as CeFi and as capital efficient as traditional finance in DeFi to make this worthwhile for me to use? Because transparency and the ability to underwrite capital risk, or counterparty risk, is not always enough. You also need it to make sense relative to the yield you're looking to generate.
When we were offline, you were explaining to me the difference between August Digital and Upshift, and you actually used both a Web 2 analogy, which was super helpful, and a crypto analogy. Maybe could you share that for our listeners, because that really made it click for me personally.
Yeah, absolutely. So the story behind Upshift is in November of last year, we had one of our institutional clients ask us, hey, I really like the tools and tech that you've built here for my trading capabilities on chain. I'd love to use those same tools in order to launch some of these vault products for DeFi users in a permissionless way. And we said, let's do it. And that basically turned into a product line called Upshift. We started working with a number of other protocols and other institutions to launch these automatic strategies in those, we call them vaults. And so the way we think about it today is that, August is the ecosystem, it's the infrastructure, and it's the tech. And it's building the tooling that then is used for a number of different product types. So in Web 2, I think about it as the Google umbrella, that underneath it has YouTube, it has Waymo. Those are 2 very different product types, but they're all still using the data and analytics that come out of the Google parent account or umbrella. And then similarly in Web 3, think about it as the layer 0 relationship with Stargate, Layer 0 is building all of the tools and tech that can be used for multiple different things. And then Stargate, for example, on the bridging side of things. And so that's the way we think about it for August, that Upshift is just one of the many different product types that we want to have in the ecosystem. But it really still boils down to how do we cross margin, how do we create that capital efficiency across different product types that make DeFi usable. Because people have talked about, make DeFi great again, and in my mind, DeFi has always been great. It's just not usable in the same way that you can use, like I said, a Robinhood, a Coinbase, or even, an account with one of the prime desks that exist today.
Yeah, and I feel like you're addressing a lot of these like underlying issues for, first, it seemed like the focus with August was the bigger capital allocators out there, like giving them access to, it sounds like 13 plus chains. And then Upshift is actually available to anyone on chain. So like, I love the fact that you've evolved to provide products, or let's call them DeFi yield products, that are ultimately being run by folks who started with something like August, and then they're providing what they believe is a safer yield that folks can permissionlessly get access to. But I think in the end, like if institutions or more credible players that started out on August are creating vaults on Upshift, obviously that credibility is going to draw money from bigger capital allocators. Like it's that classic sort of story of, folks want to buy from other folks like them. And even when you talk about the biggest capital allocators in the world, as much as I'm sure they're, fawning over some of the awesome yield strategies that are available on chain, at the end of the day, like they have to be able to get exposure to yields that are defensible. And so I think, again, like these more credible players that I'm calling out, that are coming onto Upshift, you almost have like a conveyor belt. Get them started with August, feed them into something like Upshift. I do want to go back to like, there's like a basic principle, or like maybe like a first principle when we were first, getting to know each other, like back in like a 2018, we were all so excited about the idea of be your own bank. I do think this was a huge part of the rise of Ethereum. I still believe in this as like an end game, but I guess now that we've seen the adoption that's coming on chain with, these like mega players like BlackRock, coming on chain onto Ethereum, is this the future now that we all believe in, that like institutions are where the real adoption will be? In fact, I think there was a tweet that we wrote down here. There was a tweet you had back on May 8th that said something like, mainstream crypto adoption won't come from convincing people to be their own bank. It'll come from giving them superior financial products that happen to use blockchain rails in the background. This can be interpreted in multiple ways, but I do think a part of maybe the story you're telling there is that the institutions like matter a lot here, and they're going to come on chain because of these products powered by blockchain. But anyways, maybe you can expand on all of this.
Yeah, I have a number of thoughts on this. I think people, who push against wanting the institutions to come on chain forget that the reason financial products work in the way that they do, the reason you have, when you go and, you purchase a stock on an exchange, you don't have enormous amounts of slippage. You just have a set amount of fees. And all of this boils down to liquidity. And people forget that liquidity comes not from, the small kind of crypto native folks that are trading in the space, but from the Jane Streets, the Citadels, the Hudson River Trading, and some of these really large institutions whose job it is to create, high frequency strategies to allow for that kind of seamless user experience. And so I think people always say, like, don't, bite the hand that feeds you. And I think at the end of the day, institutions are going to be the hand that, while there are pros and cons to them coming on chain, will lead to a better user experience in that, I mentioned liquidity, but that's a really large one, but also as it pertains to getting lending rates down and, creating more of that, again, capital efficiency as well on chain.
One thing I've never forgotten, I never forget all of the things I've been wrong on over the years. And so like add this to the list of 100+ things that I think about a lot, is that I really was bought into the be your own bank vision. I still believe it will happen, but it is further out than I ever thought it to be. And I was holding a pitchfork, like, why are we going to serve TradFi? They've got access to all of this. DeFi was about like burning down like the legacy system and building something better. And I absolutely see now the opportunity to partner with, folks that want to access that yield on chain. So in other words, like I see a path to a better world where you have permissionless, trustless access to a better finance system. But in the meantime, I think it's important to be onboarding these institutions. Anyways, I don't know if you see it the same way. I feel like you must, Aya, given what you're building.
Definitely. And you hit the nail on the head. I think the difference here is we have to meet halfway. And the reason for that is when you say, folks want to be their own bank, what they forget is the back office of a bank absolutely sucks in that you have so much operational overhead. Think about all of the accounting across all the different chains that you're using. Think about making sure that the APY you see is the actual number you get out and that all the calculations are being run correctly. I mean, how many times do you enter into a pool thinking that you're just going to deposit assets here and earn some savings rate, and then you don't notice that there's an exit fee, slippage on the way out? It is significantly different than, the rosy picture of what you were kind of bought into. And so I think that's where we have to meet halfway because the end goal is not to turn DeFi into TradFi. I agree with you 100%. That, in my mind, is failure. It's to bring, and I think this is where you're getting all of these headline announcements, is that now, for example, stablecoins poses a huge threat to a number of businesses that are running for banks on the operational side, but it also creates a lot of opportunity in that it makes things operationally simplistic when you don't have to deal with all the backend operations that some of these banks do. And so, now you're seeing a lot of these banks partnering together to create their own stablecoin. And then you're seeing a lot of that also crypto adoption happening in FX, a market that's already 24/7. And thinking about, how to price things, how to create that capital efficiency, how to deal with sending money from point A to point B in a highly efficient manner. And again, taking down all of the fees and costs that exist with that. And so that leads into remittances. And this is, remittance has been a huge area of adoption for crypto. The ability to send money at a portion of the price and significantly faster rate. And so stablecoins has been a huge value capture to get the attention of these institutions. And now we have to meet them halfway on some of these other things. And so the other pieces, at least where we see, is on the execution of some of these strategies to earn yield. And when we started in the space, it was, you could run some of these strategies by yourself. You didn't need algos. You didn't need, 24/7 alerting systems. You didn't need a phone call to make sure that you topped up on margin automatically. And now the systems are so sophisticated that, and that's what I mean by, you don't want to bite the hand that feeds you, is that as these institutions come into the space will become more sophisticated. And the opportunities that used to be available to retail are now, and just anyone without sophisticated backend systems, are now more unaccessible. And, that's, I would say, what falls into a con of it. But the pro is that the liquidity is so much better. When you go to execute things, you get a better price. When you think about, how many assets are on chain and the types of assets that are on chain, we can talk about RWAs. That's, incredibly different. Right now, you can collateralize against treasuries. Now you're seeing tokenized stocks on chain. I mean, this is things that, people want globally. And it's huge value capture. And so that doesn't happen, though, when you think about, for example, stocks. And pause me if I'm rambling, because I could spend hours on this topic. But when you think about, for example, purchasing stocks, you need liquidity in order to do that, right? And so, and think about all of the backend operations that come with reporting, making sure that you actually go and execute the underlying asset, where on whatever exchange you're going and purchasing it on. And so all of that needs to be managed by someone and paid for by someone. And so that's where I think you still need that institutional intermediary. We just need to meet them halfway.
I still would contest that in my own experience, having grown up in like small town America where like basically everybody banked with like one of the big banks, and you had a savings account that like was always making like a fraction of 1% in terms of like any sort of yield. Folks would have been able to, I think, rethink their portfolio, their like tiny bit of savings, if they would have had the ability to basically permissionlessly hold some store of value. So like, folks clearly were still going to get some exposure to stocks, even where I grew up. But the ability to borrow against that, like, honestly, like everything else could fail in DeFi. Just the ability to be able to permissionlessly borrow against a collateral that you see as a store of value, like it gets a huge unlock. It's absolutely like, without sharing numbers, but like if you went back over 8 to 9 years of my time in crypto, that was the ultimate unlock. At some point I realized, wait a sec, so I've been like DCAing into this stuff for years. Some of this is finally worth something like material in my life. I can borrow against this. I borrowed against some Bitcoin in 2021 for a down payment on our home, and I was able to pay that loan off. Thankfully, there could have been a disaster to that story too. Don't follow what I did there. That could be a very bad outcome if you don't like manage to get out of that loan in the right time. But that was huge for me. That was the first time I really realized value off chain from what I had been like building on chain. So, like going back to the basics of DeFi, just holding something of value in this digital economy, being able to trade it at a moment's notice is huge. And like the liquidity has really become reliable for like major assets like Bitcoin and ETH and Sol and so on. And then being able to use that to be able to earn some yield through like a vault on Upshift, or earning or borrowing against that as well. Like these are huge opportunities. Plus throw in all the other things you mentioned about like tokenized stocks and RWAs and T-bills, like tokenized T-bills, which is basically every stable coin out there is being used in T-bills right now.
Yeah, 100%. But the other thing I would add too that you mentioned is managing the margin on your loan, right, against the Bitcoin, so that you aren't margin called. And if you think about that today, just taking a step back, first of all, financial markets are already pretty inaccessible. That's why, Robinhood is as successful as it is. And that's why you've seen crypto be as successful as it is as well. But then managing, if you do want to create additional leverage, managing that is, a full-time job, and crypto has volatility. And so for us, the goal is, how do we increase the return of really any and every asset that comes on chain in a way that is institutionally managed and curated automatically? You can, there are 100% risks with being able to do so with, and there are more risks with certain assets than others. But in a way that, the unlock for you, for example, can be shared by so many other people, but, not without the 24/7 monitoring and managing and alerting systems that, no one has time to build out. And so I think that's really our focus. It's, everyone talks about this kind of one-click trading. Everyone talks about bringing these assets on chain, but the user experience is still not there where, people don't necessarily need to know that crypto's on the other side, that blockchain's behind the scenes. Really, people just need to know I'm earning, X amount of yield, and this is now accessible to me where that level of yield wasn't accessible to me before. And I think that's the future that we're hoping to build towards. And to your point, we're still, and that's where you become perhaps your own bank. But, we're still ways away from that happening. And that's just because the technology is phenomenal, but it's really hard to build. And so we're definitely getting there. And as more of these assets come on chain, the yield and the capabilities of what you're able to do on chain increase drastically. It's just, how do we get that user experience more seamless?
MANTLE is charting a course towards a future of enabling crypto access for everyone, with major endeavors to build MANTLE Banking and MANTLE Index 4. MANTLE Banking means a new crypto neobank that helps users spend, save, and invest across their fiat and crypto finances, all in one account. MANTLE Index 4 is a tokenized fund in partnership with one of the leading tokenization platforms in the market. You can think of MI4 as the S&P 500 of crypto. To learn more, check out group.mantle.xyz, and thanks to the MANTLE community for supporting us here at the Edge Podcast and Edge Newsletter.
I like the be your own bank, and like the institutions are coming that everybody was saying. I feel like we're always early on like our dreaming and narrative building on when it'll actually happen, when the tech will catch up. One thing that I always loved about DeFi, or like that was exciting to me, was just this idea of money Legos and composability. But it was clear if you were around in 2020, things were too nascent. Like there was a trust issue. Protocols really couldn't build on top of each other because they were all breaking left and right. They were getting hacked. They were getting exploited. We're now in this place where it feels like money Legos and composability is actually real and it's happening. And I feel like I look at Upshift and you're like one of a short list kind of leading that charge of like bringing this vault composability back. And I'm also feeling this like almost blurring of the lines between what is a stable coin and what is a vault. And it's actually a really cool space for, a DeFi nerd to be right now. It's like things are actually coming together and playing out the way we hope. So maybe if you could just speak to that importance of composability with Upshift, because like you're like this intermediary that can kind of work and pull from a ton of different places. Like I see you on Pendle, I see you working with all these curators. Maybe just speak to the importance of that, nimbleness that you need to be composable with all these players.
Yeah, absolutely. It's to your point, it's the beauty of DeFi 1000%, because in CeFi, exchanges rarely work together. And they're very competitive. And it's this idea of how do I take more market share from the other exchange versus how do I create net new users and net new market share that didn't exist beforehand. And what we have with DeFi is there is a way to work with quite literally every single protocol in the space, and every dApp and every blockchain. And so what we've been able to do is find different strategy managers that have specific focus areas. Those focus areas can be around point farming. Those focus areas can be around basis trading. We have one strategist who is able to, hedge impermanent loss with options and can do so really, really well, and has made that strategy available in a permissionless manner. And that's a very, very sophisticated strategy that very few people know how to do well and at scale. And so for us, it's, how do we take this sophistication and bring it to these different protocols so that users can really capitalize on yield available across the space. And so, one, it makes the protocol happy because, you're bringing net new users. And two, it makes the strategist happy because, they're able to backtest these strategies and run them at scale and make revenue on net new users that perhaps they wouldn't be able to capture beforehand. So it is really a win-win. The product we're super excited to launch too is, you get this issue in DeFi where there's so many opportunities that now, again, you're flooded with too many options. And so we're going to launch, a flagship vault that basically allocates across, portion across different strategies, and it's a lot more balanced. But to your point around the composability, that's the beauty of DeFi that really does not exist both in traditional finance and in CeFi. For example, if you have a position at Goldman Sachs, you can't borrow against that position to trade in your interactive broker's account. That just does not work. And so again, going back to having all of these protocols working with one another, you capture net new market share as more and more folks come on chain that you just wouldn't capture historically, and it becomes more capital efficient. So what we've actually seen is, we've actually seen DeFi and on-chain protocols capture market share from CeFi exchanges and Prime because you have that composability, makes it more capital efficient. And what I mean by capital efficiency, that's kind of like calling institutions. Capital efficiency just means it's cheaper. And so suddenly, if something's cheaper to execute on chain and you get the same yield or higher yield, why would you not do it on chain? And so, we've seen that with borrow rates. We've seen that with with basis. We've seen that with, and then just organic yields on chain. And as more of these assets come on chain and you're able to use that asset across the, whatever ecosystem you choose to use it on, that becomes really, really exciting. And so, I think that our goal is to continue to stay agnostic and find ways. Again, the vision is really, you shouldn't know that it's blockchain on the back end. You shouldn't know that it's crypto. What you really need to know is there's yield and it's accessible to you, and you don't have to manage the X amount of blockchains, the X amount of protocols, and the X amount of assets on the back end in order to, get exposure to it.
So I want to ask you about the users on Upshift, but I think what I'm dying to know more about, and I think this leads into the users on Upshift, is, with all of the folks that you would work with through an August Digital, and some of those, again, also using Upshift, when we talk about institutional clients in DeFi, what are they actually seeking out? This is something that everyone waxes on about, but, as Nomadic pointed out, the institutions are coming, but we're at a point where, we have verified that players like BlackRock have billions of dollars now on chain. That's been a huge development to be able to know that there's X amount of money on Ethereum mainnet. I think if I was looking at RWA.XYZ, I remember ZK Sync was one L2 that notably had quite a bit of liquidity, but also clearly Solana is in there. These are tiny slivers of the pie compared to Ethereum mainnet. Now, as a longtime Ethereum investor and ETH bag holder, I basically want to know, are institutions favoring Ethereum mainnet? Can you verify that? Is there a conversation of, all right, where can we earn yield? Okay, there's all these different options. We know that Ethereum mainnet is truly secure. Is that conversation actually happening behind closed doors with the folks that, that you're working with?
Yeah, so I'll start with the last question, and I would say yes. Regardless of, so I would say, without a doubt, institutions are primarily trading on Ethereum mainnet, and it's primarily because of the protocols that are built on that blockchain and the yield that's available on that blockchain. And then it also depends on how difficult is it to bridge assets to and from other blockchains, because the hub still to this day remains to be Ethereum. And so what we've seen is, okay, if I am trading on Ethereum because it has the most liquid markets, it has the most liquidity, it has, protocols like Pendle, which are, highly sophisticated and have high yield, then if I want to trade elsewhere, how difficult is it for me to then send my money from Ethereum to other blockchains? And so that's at least kind of the user journey that we've seen once an institution is on chain. Solana, we've seen, activity happening there, but it's really specific to more retail style trading. So, NFTs, we've seen quite a bit of, and then some incentive farming that we've seen as well. When it pertains to Avalanche, Avalanche has done a tremendous job of bringing assets on chain. But then again, it's a question of composability. And so, where we've seen requests for that specific blockchain is to make, those assets composable with assets sitting on Ethereum mainnet. So we still see, at least from, the clients that we trade with, that we still see that Ethereum is the main hub. Now, to the first question that you asked around what are these institutions looking for that are trading in Upshift, it's actually very interesting because we have August clients who are also Upshift clients. And that was a big surprise because you would assume that all clients using August who are running some of these algorithmic strategies would just run the same strategies themselves across the board. And what we've seen is some of these institutional clients say, hey, look, this is my bread and butter, or I don't have the operational bandwidth to support 4, 5, 6 other strategies. I'm just going to do these strategies really well, and then I'm going to outsource this to one of these vaults that automates the strategy directly. And that was a huge surprise. And so I think, or because there's a lot more composability happening with this vault, and so I can make more, I can use it in a more broader way than some of the strategies that I'm currently running within my fund. And so that was a really big surprise, where we expected that primary users of Upshift would just be, kind of the folks like you and I that don't necessarily have this built out systematically. But even those that do have the systematic capabilities, we've also seen them be depositors of Upshift. And so it always comes back to, the operational overhead of, being able to manage these in order to get the yield that you want to get. And the truth of the matter is that engaging with DeFi today is operationally very cumbersome, very, very cumbersome. It's hard to, just track all of your activity in one place. And there's very few places that will aggregate it in an easy, digestible manner. And so, it doesn't just need to be individuals like you and I. It can also be some of the more sophisticated folks that just don't have that bandwidth.
Hey folks, I want to tell you about our sponsor, GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to GEARBOX.fi.
Egg. A quite astonishing commodity. The cause of your desire. Egg. Which fills the inner void. Egg.
Eggs are pretty epic, but you know what's more epic? Paying for them with crypto. Borrow, earn, and now pay with MOONWELL.
Say hello to Puffer UNIFI. Puffer Finance is expanding beyond native liquid restaking with new products such as UNIFI-based ROLLUP and UNIFI pre-confirmations AVS. UNIFI is not just another L2. UNIFI is a based rollup, one that will solve L2 issues, such as slow withdrawals versus instant withdrawals with Puffer UNIFI. Puffer UNIFI is fast, capable of sub-second transactions. UNIFI also has boosted Puffer points, which means if you bridge assets, you earn boosted Puffer points and rewards from dApps on UNIFI. Puffer's core products mean a bright future for Ethereum. Learn more at Puffer.fi. I've been beating this drum for years. I still think there is tremendous edge in just being a user. Like, go on chain, try Upshift, try Fluid, try Aave, try Pendle, try GEARBOX, try Maple. Like, these are platforms where if you are using them regularly, you will learn firsthand, all that goes into managing your own assets. And even though, again, I'm not going to pretend like, let's say me as an average retail user, all those principles might not translate to someone who's managing billions of dollars. You are walking through like a similar sort of decision-making process. The longer you're in this space, the more you learn firsthand from all the exploits and Oracle failures and so forth. And my problem with, crypto Twitter still in 2025 is some of the loudest voices on the timeline are, intellectual folks who, let's call them investors who live in ivory towers, who just continue to talk about how everything's possible for this new thing that's been created. This new chain could absolutely capture an enormous share of Ethereum, but they are failing to recognize that the security and uptime of something like Ethereum mainnet is giving an advantage to folks that want to be able to gain exposure to reliable yields that they can sleep on overnight, that's defensible. And, this is part of the reason, although I'm extremely excited for what Solana's been building. I continue to use the likes of Camino. I use Parcel. I look forward to using other Solana DeFi protocols. They're the third ecosystem that's had this sort of breakout. And then I have a lot of respect for all the other names you called out, like Avalanche, I think has, continued to do really great work over many years. But for whatever reason, there's just a lack of respect for what it has required for something like Ethereum mainnet to continue to exist and be uncensorable and be reliable. And the institutions see it. And, maybe it's because we live in a world where everyone that, made some wealth invested in a new L1 and has a huge bag that they're going to, shill until the end of time. But it's affirming to finally see these institutional investors coming into the space and reading the room the way that I would have thought they would. As a user, I'm like, how could they be deploying that much more capital onto other chains? And by the way, all of this is verifiable. You go to rwa.xyz. It's all there.
No, I mean, look, I think you hit the nail on the head in that you have to follow the money and the liquidity doesn't lie, right? And the liquidity consistently has been on Ethereum. And, we get asked this all the time because we are institutionally positioned all the time. When are institutions going to come to, insert chain name? And, at the end of the day, it really just depends on the product offerings you have on that chain. That really is just it. These folks will come to those chains once, yields are sustainable yields, which means sustainable product offerings exist on those said chains. And so I would say that's kind of been the deciding factor. And you also mentioned something really important that I want to dive into is security audits. Can't emphasize this enough. Obviously we take this very seriously. We do a security audit every time we run an integration on whatever protocol for whatever asset. And then we also get audited ourselves. Audits are expensive, and I don't think it's talked about enough. They're very expensive. We are still waiting for insurance providers to enter the space and size as well. So we can all get insurance. And the insurance providers will become auditors too down the line. And so that's kind of what we're looking for in terms of the evolution or institutionalization of the space. And I'm sure that's what other institutions are looking for too. But it's really expensive. And like neither you nor I are going to pay for an audit of every single protocol that we use in order to feel really safe around using it. And also not every audit means that the protocol is currently safe either. So, auditors miss things, they're human. So you need to get multiple auditors. So I think and incentives around getting an audit are also kind of misaligned sometimes too. So there's just so many pieces here operationally for wanting to make a deployment into whatever protocol, whatever asset, whatever chain, that it just complicates things so much that having one place to do so at scale is really efficient. But yeah, look, I think, at the end of the day, as someone who's been holding Ethereum for a very long time, I'd love to see more engagement on the broader level with, different administrations, obviously, and see more products being launched live on Ethereum as well. What I've seen that's been interesting, I don't know if you would agree or disagree, sometimes you see other product offerings launching on other chains, but they still make their way back to mainnet. And, if you are BlackRock, you don't want to take a position. You also want to be agnostic. And so you've seen, just follow the liquidity. You've seen where, the primary liquidity ends up being. And at the end of the day, BlackRock just wants a larger market share and new users. And if those users are on mainnet, so be it.
I'm a multi-chain user still to this day. I'm absolutely, I would say I'm a maximalist in terms of believing that the future will continue to play out as it has. It is already multi-chain. I think DeFi made that more possible. I've always loved Hasib Qureshi. Hopefully I'm saying his last name correctly, but everyone knows who Hasib from Dragonfly. I've always loved the way he painted that analogy of they're like different cities, and that like Ethereum is New York. And I think the legacy issue I've just kind of rambled about and called out here is that there's always been this talking point since, New York has really been like the most like dominant global sort of like iconic city. And obviously in terms of finance, top dog in the world. But there's always been this talking point of like, oh, this other city is the next New York. And anyone that's lived in New York or lived in multiple cities like a New York, like, there's only one New York. And that's my point is I think that we're seeing the institutions affirm that, hey, there's only one Ethereum mainnet. Very excited for, again, what's being built elsewhere, some of the chains we called out. And this also applies to L2s as well. Like I'm excited to see, an Upshift, build vaults across many networks. I absolutely want to see that. But at the end of the day, I know the biggest size in the space where you're going to be able to deploy into really battle-tested protocols like Aave. And that's why what you're building with Upshift makes so much sense to me, because as these protocols become more battle-tested, now we just need these backend systems on chain like an Upshift to automate all of that exposure.
Just looking at Upshift, where has the most kind of TVL collected? Like what are like the top vaults that users are depositing into on Upshift these days?
Sure. So the platform, I believe, is currently over 350 million in TVL. And, one of the largest vaults we have is UpUSDC. That vault acts as an over-collateralized lending vault. So it'll lend against all of the KYC, KYB users on the August side. So these are institutional clients staying within the August ecosystem. Within the vault, you not only see each of the collateral types that the loans are deployed against, but you also see the health factor affiliated with each loan, which is net new and to the space. And so what's really cool about that is, I know I'd previously mentioned this closed, almost like a copper clear loop, this closed ecosystem of August trading and our ability to then calculate the health factor across all the assets in that account. So you can actually see that exposure when you're lending into the vault. Outside of that, some of the other vaults that we have that are pretty sizable, we've been really excited to partner with Kelp on 2 vaults, Kelp Gain, and then also High Growth. And so those have done significantly well, really focused on both on the point side, the restaking ecosystems, and then the Kelp team has been just absolutely tremendous in composability for RSE across mainnet, and so that's really exciting. One of our newer vaults in the Hyperbeat ecosystem has also gone live. So Hyperbeat in partnership with Ultra Yield, we're super excited about that one. That team has been an absolute pleasure to work with. As well, and so that scaled. And then one that I'm personally super excited about. I mean, we recently launched Mezzo. I believe that has one of the highest APYs right now for BTC, and so that's something. Obviously everyone's always looking for additional BTC yield. So up T BTC is something that's really really top of mind. And then the last one, I know I mentioned the Silva one. That's doing something really interesting with connectivity on the option side of things. And so the ability to hedge impermanent loss with options is something that, I think very few people have done well. But, all in all, I don't have favorites. We love all of our partners and protocols that we work with. And we've been very, very lucky. I think at times there were certain times where we've been approached by certain protocols that we just, things didn't work out for whatever reason. And we've been able to dodge a couple hacks. We've been able to dodge working with, just not necessarily the best people in the space. And so we are very, very fortunate today to be working with tremendous partners and have a lot of respect for what we've built with them so far.
Something else I want to ask, just as far as maybe this is kind of 2 questions. I'm curious what the upcoming roadmap looks for August Digital. Like, are you building new products like Upshift with August right now? Kind of curious what you're focusing on. And then just with Upshift itself, like what's like next on the roadmap for you? What are you excited about right now with Upshift?
Yeah, it's a great question. For us on the August side, the piece we're most focused on is execution. So lending, we see lending as the hook and execution are the rails to really creating a better user experience. And so execution today, we talked about this, but everyone talks about this idea of one-click trading. What does one-click trading look like? A lot of times one-click trading means that someone's still manually executing those trades on the back end. And so it's not necessarily technologically one click. One thing that we're pretty excited about is transaction batching. And so if you go and your strategy is to create some sort of algorithm to systematically, let's say you deposit assets on Aave, you borrow against it, you use that to deposit on Pendle, you take that asset and maybe you put it somewhere else to borrow against it. Maybe there is a staking mechanism within that whole flow of funds. If you can put all 5 or 6 of these transactions into one click and batch them, that is a wonderful user experience. That is an incredibly complex problem to solve, especially as you are hopping between different protocols and across chains. And so that's the area that we want to get really, really good at. I think what gets us excited is how do we make execution as seamless as possible, in as few clicks as possible, and then as accessible. So that's on the August side. On the Upshift side, it's being able to use that same execution piece as well within the product offering that we have. But more broadly, it's still composability. How do we continue to bring more yield to the assets on chain? So as more of these assets are coming on chain, whether it's Acker from Apollo or it's or ACRED, I believe it's called, or any of the assets listed on RWA.xyz, or some of these new tokenized stocks, any of those assets, it's really how do we now create usability for the assets once they're on chain?
Well, I think this is a good place for us to start to wrap up. So I want to remind our listeners that they can learn more about Upshift by going to Upshift.finance. They can learn more about August by going to augustdigital.io. They can follow Upshift on X. It's Upshift_FI. Follow August at August_digital, and then follow Aya at Aya_Kantor. I just want to wrap up with, I think it's really like full circle to see that Upshift is building like a product that I remember calling it one-click DeFi. I'm not sure if like who else called it that, or if that was like a term that I was like actually coining many years ago. But I got really excited for, early on the Yearn vaults, and then Harvest and Beefy and all of these products. But these were products that were mainly catering to, let's call it retail or crypto whales. But the point is those products were so easy to use. And to your point, like everything that was running on like Ethereum and other chains, like on those blockchain rails, the technology is incredible, but it just was not easily usable. And so we're at a point now where, again, a network like Ethereum has become so legitimate in the eyes of these institutions that they're willing to get that exposure. Obviously, a lot's changed from a regulatory standpoint just the past year. And so we're at a point where they're willing to get the exposure, but they need a more usable product. And it's exciting to see what you all are building. We've really been fortunate lately to have a number of guests on the show that are kind of working at this bleeding edge alongside you. Maple was another guest we had on. Level, we just did a yield talks with. There's a clear theme here of making DeFi usable, and not just making it, again, usable for retail, but making it usable for some of the biggest capital allocators in the world. So I don't know how anybody couldn't be bullish. I'm as like bullish as I've ever been. I'm as confident as ever that like we're going to have trillions of dollars come on chain. 100 billion is going to look like a joke across all of DeFi. Like we have many trillions to go. So anyways, thank you for joining us. So excited for what you're building. We'd love to have you back in the future, and just want to give you the final word.
I really appreciate you both having me and just the thoughtful discussion that we had. It's always nice to really dig into it, especially with folks who actively use the products in the space and have been through the pains of where products were back, in 2018 and before, and just have seen the evolution. And, at the end of the day, I think people just forget that this technology takes a really long time to build. It's complex and it's hard. And, so many people that you've brought on your podcast, I have so much respect for all the work that they're doing. So thank you for shining a light on them, and really excited about the roadmap we have ahead, and more conversations like this as well.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.